Hi, my name is King Hughes. Uh, I've been in the equity markets for around 25 years or so. I got interested, believe it or not, Christmas Day when I was 10 years old. I started trading stocks and grew into managing a family office and then growing into the hedge fund business and ultimately have ended up in the exchange traded fund business. I currently have a partner that has put together a better fund than many other counterparts and peers within the group in the exchange traded fund business.
Okay. Um, First thing, what is an exchange trading fund?
An exchange traded fund is a product it's a fee based product. It trades publicly just like a stock, be it Exxon, Apple, you name it. It's just IBM, except for it has a different name and or a ticker symbol. And our forensic accounting exchange traded fund is actually the ticker symbol is FLAG, as in flag. And what we do is we flag the companies out of the S&P 500 that we think have the most risk involved in bad accounting, possibly fraudulent accounting.
Oh.
And so we kind of kick them out of our index.
Yeah.
What you get out of an exchange traded fund is the opportunity to have management similar to a hedge fund, a mutual fund, private wealth management, except for you're usually should be paying lower fees and it is liquid. And liquidity these days is enormous, and that means I can buy it today and I can sell it tomorrow. Now, should it be we're in a privately managed account, you're stuck there for till the next quarter.
Yeah.
You're in a hedge fund, which I ran a hedge fund, Tarpon Capital Management, for a number of years. You were locked in for 1 year. You're locked in for 1 second. So you buy it and you make 25 cents and decide you want 25 cents, you sell it.
Oh.
And the fees are much lower.
Okay.
So that is and they're growing, and you basically get the benefits of a money manager at much lower fees and greater liquidity. But there are some things you have to be careful about as you get invested in them.
Great. What are some of the benefits and also risks that would go along with investing in a exchange traded fund today, such as Flag?
Well, the risks would be the liquidity factor in some instances. Some of them are, you can invest in anything from real estate to oil and gas to stocks in the S&P 500, which is what Flag does. We kick out the 100 worst and double up on the 100 best on an A to D rating on who's got the best forensic accounting. And we double up on the top stocks. And the fees are very low. But you can invest across the board in almost any industry group. And what you have to look out for is the fees could be higher. And again, we go back to liquidity. With Flag, the liquidity is an underlying net asset value within the underlying stocks. So there is virtually no risk when it comes to liquidity. If you want to buy it and sell it, it's not a problem. Now, there's many other things, and like within the real estate market, the liquidity might be a little bit different. So one day they may value something at X dollars, and the next day it's Y dollars, and you could lose a few percent here and there due to differentiation on a product that doesn't sell on a daily basis like all the stocks in the S&P 500.
Yeah.
But you can invest just about in anything through exchange traded funds now and have the liquidity, daily liquidity.
Can you say a little bit more about what kind of fees would be associated with investing in them?
The fees, you always want to pay attention to them.
Mhm.
That should be one of the benefits of an exchange traded fund. They should be much lower fees, and as I mentioned in the hedge fund business, when I used to have a hedge fund, we feed 1% of the underlying assets, and we took 20% of the profits.
Mhm.
Now, in the exchange traded fund that at Flag that we're running, we're charging less than 1%. That's it every year.
Mhm.
Now, it doesn't matter if we're up or we're down, we're still going to charge you a low fee. But the problem is, with the hedge funds, is you have benchmarks, so you may have in your contract an 8% benchmark. So let's say 1 year you make 20%, and then the next year you lose money. You've got to get back.
Yeah.
You've got to get their losses back plus the 8% before you can start collecting 20% of the profits.
Right.
So the exchange traded fund business, after the hedge fund debacle and a lot of people that have broken the law and cheated our country, like Bernie Madoff and many other hedge fund managers that have lied and done crazy things with the funds. This is a much more managed product. It's governed by many, all of the government regulatory agencies, as well as multiple compliance officers and whatnot. Some of the things that are tough about getting into it, I don't know if you're about to ask me this question.
That's okay. Go ahead.
Some of the things that are tough is you have to worry about if you're on the other side of the exchange traded fund as an investor or a startup company as Flag, you have to worry about being able to hang in there and pay your operating costs and your compliance costs, and having someone help rebalance your funds and your strategy. Therefore, it's important to align yourself with some major banks and try to get a partner like that. It's very tough to start it up because it really does. The break even points on the to get the profits. You really want somebody on your side in a major bank is always nice. Be it any of the U.S. banks or international banks. They're all in play. They're all in exchange traded funds. It's a very large growing industry. One of the top in the world now.
Thank you very much.
Thank you.